Well, shifting gears to the Conference Board's Consumer Confidence Index, it dropped for the third month in a row, though not by as much as feared. So it seems Americans are not all that confident in the economy, but they keep on spending anyway. And so the economy keeps chugging along. Have I got that right? Well, so if retail therapy is helping deal with the doom and gloom, where is this money coming from? Well, let's talk debt. All year, we've been talking about the strength of the consumer propelling the economy along. But was it built on a house of cards that's ready to fall?
Well, the San Francisco Fed has been among those in recent months to warn over dwindling pandemic savings. In a publication earlier this summer, it highlighted the rapid accumulation and then drawdown of excess savings following the pandemic recession, saying it contrasts starkly with prior recessions. So is there a sense of impending doom here? One thing is for sure, Americans are sitting on a mountain of credit card debt, well over $1 trillion at this point. And according to the latest data from the New York Fed, it's up from the first quarter of 2023's record number. So what's your best weapon against this burden growing out of control? Joining us now is Matt Schultz, LendingTree Chief Credit Analyst. Matt, good to talk to you today. Paint the picture for me first, though. I mean, we kind of rattled off some numbers there about where the consumer is today, but how quickly is that debt mounting?
It's mounting like crazy. Like you said, we topped $1 trillion in credit card debt for the first time earlier this year, and that number is only going to rise. And even though delinquencies are still relatively low by historical standards, they're rising and things are normalizing a little bit. And even with all of that, the consumer, with most of the numbers, show that the consumer is still doing pretty well. Although I can't help but think that the margin for error for a lot of these households is pretty small, and it wouldn't take a whole lot to shift somebody from feeling pretty good about their finances to feeling pretty shaky.
Because, Matt, it is hard to decipher because we keep getting these narratives about the mounting credit card debt, how obviously more Americans are living paycheck to paycheck, and then FICO coming out with a report saying that the average FICO score has gone up versus the past year. How do you, when you look at that data as a whole, is it because there's some sort of lag, or is there some sort of other shoe to drop that hasn't made its way into these credit scores yet?
Well, the credit scores are kind of a lagging indicator, but they're also just kind of imperfect by nature. For one thing, it doesn't necessarily show where people stand with student loan repayments and how able they are to make those. And even when student loan payments crank up in full, those defaults and delinquencies won't be reported for another year. So that's going to be another gap. And then another big thing that's missing from these FICO scores and all credit scores is buy now, pay later loans. And we know that those are a huge phenomenon. There's a lot of money in those. And even though those tend to be short-term debt, they are still impactful as to the average consumer's financial situation. So there's so many X factors. It's just a funky time in the economy generally. So it's all of these numbers give these kind of mixed answers.
Matt, of course, we're seeing all this against the backdrop of rising rates. And, you know, if people have checked their credit card lately, those rates are really high when you compare to where they were several years ago. We've had a number of guests that have come on who've said, look, sometimes you can call your credit card company to see if you can negotiate a rate down. What do you advise there, specifically for those consumers who have high debt, given just how that could really ding their credit score?
You absolutely positively can call your credit card issuer and ask for a lower interest rate. We've been tracking this for a few years at LendingTree. And when we did a survey earlier this year, we found that 76% of folks who asked for a lower interest rate on their credit card in the past year got one. And the average reduction was about 6 points. So that's the equivalent of going from 25% to 19% on your credit card APR. And that's a really big deal. And with that type of success rate, 76%, It shows that it's not just people with 750 credit scores and long track records that are getting their way. It's people who need help. It's just regular folks who are struggling along. So it's a really good idea to make that call. Maybe use an offer that you've seen at LendingTree or in your snail mail to help kind of frame that conversation and see if your credit card issuer will match that other offer. It's such a competitive marketplace now, there's a good chance that they'll at least listen to you.
Some good takeaways there. Matt Schultz, LendingTree Chief Credit Analyst. Good to talk to you today. Appreciate the time.
Thank you.